Hello, everybody. October 9th, 2022. Nathan from Queens, Ultimate Traders on Reddit. I'm going to do 4 videos today. Probably 2 short videos, 2 okay. But this video is the most important video, I think, because a lot of the market is rallying on bad news. The last couple of days, we came off a little bit. On Monday and Tuesday, the market had vicious rallies, almost 6% up on the S&P, almost 7% in 2 days on the NASDAQ. Actually, in under 24 hours of trading, from Monday morning to Tuesday up market close. Now, last weekend, there's a whole bunch of issues with the pound in the UK. Actually, this has been going on for more than a week. And news about Credit Suisse having difficulty with liquidity. Now, a few months ago, I posted on Reddit, as soon as Credit Suisse needed new bonds, meaning they need to borrow money, they got new bonds with the rate of 10% coupon. Now, this isn't something that Nathan says. When you get a bond and the rate is 10%, then that's a junk bond. So anytime you have a bank with junk bond status, that's something that you have to be wary of. So my thought process, and a lot of people on CNBC were saying the market went up because news was so bad overseas, and Australia, instead of going up by half a point, they went up a quarter point. So the market had a vicious rally, thinking that the Fed would pivot. So this video is telling you why the Fed will not and should not, will not and should not pivot. Now, I've done a lot of other videos on the rates and what the rates would do to companies. Before, at the start of the year, already anyone that follows the economy knows that rates were too low. They've been artificially low because of the pandemic. But I had a thought process that we were going to get close to 2% interest rate before the end of the year. But remember, this is in January. We didn't see inflation hitting that hard. November of last year, Powell was saying that inflation was transitory, and we would not likely have even one rate increase to the year 2023. Now, I knew that was not the case. I told a lot of people on Reddit, a lot of people, ultimate traders, that we're going to see 2%. Now, because inflation was rising and it rose historically high, we're about to see the Fed overspike us with interest rates. And that's necessary. And this video is why they should not and will not pivot. Now, the reason why I feel, it's not just I feel, that I know that I'm as good as billionaires, and this is not FUD. I'm as good as any analyst on TV. So a lot of people that follow me know I've been trading since I was a kid. My 14th birthday, like late 1994, I started trading. The purpose of me even saying that is I did it. I wanted to get cars, and I was born into this. It was something that I do. It wasn't even for the money. Money is something that comes afterwards because you're good at it. Like LeBron James or Michael Jordan. Obviously, they're gifted. Obviously, they made a ton of money doing it. And they're still making a ton of money for how excellent they were doing basketball. So I didn't know how good I would be at trading or anything like that. I knew I was very good at math because the first 2,000 that I had come when I was 14 was from tutoring. I used to tutor people when I was 12, 13 in math, mainly in math, and I knew I was good at math. But I didn't know what I would become from being good at math and trying to have nice cars at the age of 17, 18, 19. When I was 19, 20 years old, I brought a brand new Acura TL Type S, a 2002. Brand new model. It just came out, and I was a kid, not even able to drink alcohol, and I was buying a brand new Acura TL Type S. So that's not trying to get my ego going. That's to tell you guys There is a reason why I know that I'm as good as anybody else. And the reason why I'm even saying that is part of the reason that you're going to be a very good trader. I'm not even going to say trader, investor for a long period of time, is by studying things so you don't repeat mistakes, by seeing things in advance. The best traders in the world can see things. They can get alerts, get signals, and know what's coming. Okay, when the market is bullish and we're on a bull run, you can scalp because there's positive sentiment and everything is going up every day. If no one is scared, stocks keep going up. So right now we're in a bear market. We're in a recession. They keep saying, we're not in a recession. I'm telling you, we're in a recession. So when it comes to a normal market, a recession, you got to be an investor, not a day trader. So the reason why I'm saying I'm just as good as anyone, I was reading these things from long ago. I studied the crash of 2000. I was in it. I studied 1987. I studied the Great Depression in the 30s, okay? They're saying 2008, they call it the Great Recession. But recession is not depression. Depression is when unemployment goes to like higher than 10%. In the 1930s, we had unemployment at 20%. I think the high was like 25%. 1 out of 4 people could not find work. And the reason why interest rates must go up, they must go up, because if interest rates, if inflation keeps going high, that means we might hit a stagflation. Stagflation is the result of hyperinflation, which is close to 10% in my eyes, like 8, even 8, we're at 8.3, 8 to 10%, and negative GDP of close to 5%. Doesn't have to be 5, but close to 5. Right now, we're looking at GDP negative of 0.9, so not even 1%. Right now, we have unemployment rate at 3.5. 3.5, we have inflation at 8.3. We have GDP at negative 0.9, and interest rates right now are at 3.125. So I was writing on posts on Reddit. The most important thing that the Fed must do is try to avoid depression, not recession, depression. So you have to do whatever you can do to knock out inflation, bring it down while you have room. There's a lot of room to bring down the inflation, which is 8.3. Why? Because unemployment is at 3.5, which is not the historical low, but close to historical lows. GDP is at negative 0.9, not 0.5. So there's room. If you don't raise interest rates, you keep it low like this. 3 points. So a normal interest rate is close to 5. 3 to 5% is like normal. So a lot of times people are saying this is crazy. It's crazy at the speed that they're raising rates, but this rate is not crazy. Normally we've been at like 5%, so this 3.125 is nothing crazy, just the speed. But you must raise it to drop down inflation from 8.3. We want to get it down, even if not 2, at least get it down to 3 or 4. At least 3 to 4. We have room for unemployment. If you want to avoid, I think we'll see stagflation if we get unemployment up to around 6% and inflation is still near 6%. So if it comes to a point where we don't raise rates fast enough and inflation doesn't dip under 6 and unemployment slowly goes up, it's going to slowly go up because companies are going to do layoffs. They can no longer get money for free, so they're going to do layoffs. But what a lot of people don't understand, and the last time that we were even close, so even after 2008, the Great Recession, I think during the Great Recession, we had unemployment at like 9%, which was bad. It's close to where you can get a depression. It's close because the depression is like 10% when you have 10%. But in 2009, we still had positive GDP. We still had positive GDP. Inflation wasn't going through the roof. So in order to have stagflation, a stagflation leads to depression. A stagflation leads to depression. Forget about recession, depression. If stagflation happens in any country, you're going to see so much crime. And we're already getting massive crime. I'm here in New York City. Crime is up about 30% over last year. Why is that? So when inflation goes up, the value of the dollar decreases. It decreases. So if you used to go out and have a dinner for $10, or you used to go out and have a movie, have drinks for $10, and now it's costing you $20, $25. So what does that do to a person on lower income? What does that do? It means they can no longer afford their car. They can no longer afford their rents. They can no longer afford to feed their families. What does that resort people to do? All right. We don't want to die. We don't want to die. So if forced to, people result to crime. Start like little things, like the CVS, like the Rite Aid, like the Dwayne Reed, like the Walgreens. People start stealing things. When they start getting away with it, then they start to bigger things. They start, they look for innocent people, handicapped people, and then they go and try to rob like little things from them. And it could just go higher and higher. That happens in stagflation. It happens with rapid inflation. The reason why we're seeing so much crime going is inflation is really high. The government was giving people money to stay home, and a lot of lower income can't afford to live. So naturally, people are going to resort to trying to get easy money. So this video, and I'm explaining why, was covering why we cannot pivot. Because you do not know the result yet, and you do not want to see depression. You don't want to see stagflation that's going to result in depression. We will start seeing the effects of stagflation if unemployment gets 6% and inflation is still 6%. GDP will slowly go down. Rates are going higher. So that's what you need in order to hit stagflation and a depression. If we can push inflation rates down to 3 or 4%, we will not see stagflation. Stagflation is rapid inflation with negative GDP and high unemployment. Because with high unemployment, people can't afford to live. And when people can't afford to live, you get a lot of crime. So that's why. And the last time that we were even close to stagflation and a depression was 1982. We had slight GDP increase in 1982. Before that, it was 1946. And 1946 was a black swan event because we were just coming off a war. But in 1946, we had high unemployment. We had inflation. GDP was not good, but that was coming off of a war. So it was a black swan event. This day and age, we want to try to avoid it. To avoid it, we must keep raising rates. Inflation must come down. You all don't understand. Money managers on TV, they're not understanding anything with a pivot. Anything, even Scott Menard, the billionaire, was saying that the Fed has to stop. He wasn't living in the 40s. Maybe he was born in the 40s. You do not want the Fed to stop. You want, even just like the Fed says, and this past week, a lot of the governors were repeating the same things. They're not going to pivot. They want to wait a few months, after they raise rates enough. The end of the year Fed funds rate was 4.4. That's what the Fed is aiming for. They're telling us 4.4, and then they'll hold and they'll see what CPI is. If CPI comes down, they'll hold, And maybe later on in 2023, they can drop rates. I'm not going to say that's definite because they got to see inflation come down. Inflation comes down drastically. We have good jobs. People can still go get jobs. Slowly, you might see crime come down. But right now, you're going to have rapid crime because people cannot pay for things. They can't pay for food. They can't pay for gas. They can't pay for rent. It keeps rising because money was too easy. And the way the whole world works is supply and demand. So if everyone is getting money easy, they're chasing after the one brand new car. They're chasing after the house. They're chasing after loans. They're all chasing after the same things and the supply and demand. So the prices go up. So that was video 1. The Fed cannot pivot, should not pivot. And if the Fed pivots, be ready for stagflation. Stagflation is worse. We have not seen stagflation since the 1930s because stagflation causes depression. Depression is 10 or higher percent on unemployment. Unemployment was as high as like 25% in the 1930s. In the 1930s, we had negative GDP of 13%, and that wasn't just 1 year. Other years, negative 5%. Other years, negative 8%. So the 1930s were just tons of negative GDP. It was just a depression. Not that that's going to happen, but we might have a minor depression, so we want to avoid it. That's video 1.